And joining us now is the author, Ray Dalio, founder of Bridgewater, one of the world's largest hedge funds. Ray, it's good to have you. Congrats on the book.
Thank you.
So is the U.S. going broke?
Yeah.
All right. If you've got a 401k, if you've got a 403b, mutual funds, index funds, you've got a target on your back. While the mainstream media, they spent the better part of 2 months distracting and talking about the government shutdown, polarizing the country one way or the other. They didn't get into why we are seeing these types of disruptions more frequently and the threat that is posed to your financial future as we see more government economic turmoil. So the world's most powerful macro investor, arguably, Ray Dalio, he is out there signaling that the end game for the American debt cycle is no longer a theory, but a reality that we are living. Now, the global debt wall just hit $100 trillion. We in America just crossed the $38 trillion debt threshold. And I know when we say trillion, people gloss over, but these aren't just big numbers, okay? What this constitutes is a tactical ambush on your economic future and the economic future of your kids and grandkids. So today, we're going to go beyond the headlines, go beyond the partisan politics. We're looking at why the 2026 reset, why it's already here. Okay, we're living it. Your assets, okay, some of which could be front run by AI overlords, and the exact strategy that Ray Dalio is using to protect his billions while the middle class is being liquidated little by little. What can we do to fight back? Well, we're going to talk about that strategy exactly today.
I want to explain the big cycle just in, very simple terms. The big cycle is like the period from one period of great change and turbulence in which various systems or orders are changed through fighting, typically. And then through that evolutionary process, there is a process that gets us to another period of breakdown. The last big cycle began in 1945, at the end of World War II. In that world order, there are shorter term cycles, like the economic and political cycles. The economic cycles have lasted for about 6 years, from one recession to the next recession.
Okay, I want to point out something valuable about recessions. The media and the culture typically characterizes recessions as something that we, the middle class, should be apprehensive about. And recessions do represent a heightened chance of people losing their jobs, which is unfortunate. That is true. However, recessions also are opportunities to acquire assets at a discount. So we must internalize that reality, because more money is made during recessions because assets are purchased on the cheap than at other times in the economic cycle.
And they transpire in a way where, the economy is weak. Central banks put a lot of money and credit into it. That causes markets to go up. There's a lot of spending. It gets too hot. Inflation rises. They tighten monetary policy, and that causes the economy to go down into recession. And since 1945, there have been 12 and a half of those. And we sometimes don't pay as much attention to the big cycle. When they reach excesses, such as debt excesses, because debts rise relative to incomes like this. If you were to look at a chart of most countries, their debts keep rising relative to their incomes, but the incomes are needed to pay the debts. And so when you get to a point where the debts are high relative to the incomes, and debt service is very expensive and starts to crowd out other spending.
Other spending like military spending. And that is extremely important. I'll tell you why in a second.
And investors do not want to hold the debt as much because the debt does not provide them the good returns, and they start to sell that debt. You begin to have a change in that big debt cycle. And that big debt cycle typically corresponds with the big domestic political and social cycle, because wealth and well-being matter to people. And when there's disruption to the wealth and well-being of that, then you have the political disruption, such as what we're experiencing now. And
with the shutdowns, okay, and with not having enough money to do the things that we have become accustomed to. And look, we're seeing that at the federal level, but we're also seeing that at the state level, where states are running deficits. States are constitutionally prohibited from doing so because they got balanced budget amendments.
So there's more fighting over wealth and power and so on, and these things come together. Then that creates the new conflicts, the new big conflicts, the changes and breaking down of the old orders, the old monetary orders, the old domestic political order, the geopolitical order, and such things, to cause a seismic shifts. These periods are periods of great risk. They're great risk for the markets. They're great risk for the society. It's very important that they're understood. So that is the world order and the changing world order and the big cycle in a nutshell.
All right, so Ray Dalio has spent decades studying the rise and fall of empires and how the economics of those empires played a role in their rise and or fall. He identifies 6 stages of a long-term debt cycle. Stage 5 is the top, right? Everybody's happy. The roaring 20s, okay? Everybody feels rich on paper, but the debt is unsustainable. And I think we would agree that the United States having $38 trillion in debt is unsustainable. Stage 6, which we are actively in, is the deleveraging, i.e. the crash. Now, this doesn't happen like a crash on the highway. It's more of a slow motion crash, but we are feeling it, right? Now, according to Dalio's latest indicators, the U.S. just officially entered stage 6, but nonetheless, we are in it. Why is he saying this? Because the interest on our debt now exceeds our defense budget. Why is that so important? Well, because there's a such thing called Ferguson's Law, which states any great power that spends more on debt servicing than on defense risks ceasing to be a great power. Right? And we are seeing that the interest on our debt has exceeded our military budget. We're there, right? All right, so as a citizen of Tyronistan, as a soldier of finance, when a nation spends more on its past, interest on the debt, than on its future, protection, which is protection of the citizen is a nation's #1 obligation, then soldiers, citizens, we need to understand that our currency, the dollar, is in a debt spiral. All right, so for the average person with a 401k, this constitutes an invisible tax. So the government's not going to knock on your door. They're not going to, forcibly take your money. It's already happening via inflation. They'll simply print so much money that your $1 million retirement fund may end up purchasing $200,000 worth of actual goods and services, especially after they've taken a portion of that in taxation. So you're being robbed in broad daylight, and most people are too busy arguing about politics to even notice what's going on. This is a bipartisan issue. I don't care if you're Democrat or Republican, it is affecting us all in the same way. There's also a new entity on the battlefield that Ray Dalio didn't have to face in previous cycles. There's something out there that we as a species have never had to compete with, and that's black box AI. So while you were locked out of the markets during the shutdown volatility, the biggest hedge funds on earth deployed what are called deep learning models. And these aren't just trading bots, all right? These are AI systems that can predict retail sentiment before you even click buy on your Vanguard account. And that's one of the reasons why I am not a proponent of trading, okay? High frequency trading, because usually folk in the middle class just don't have the technology to keep up with the speeds at which these supercomputers that these financial firms use, at which they trade. So they're front running the 2026 reset. They know the dollar is rapidly devaluing, and it has been for some time. So they're vacuuming up what are called hard assets. Okay. What are hard assets? Real estate, gold, silver, water. Why water? Well, turns out AI is very thirsty. And we'll do a whole segment on how AI data centers are consuming massive amounts of water. All right. Now, is investing in paper still a viable idea for us in the middle class? It is. However, we have to be much more vigilant about our paper assets than we have ever been before. We cannot just set it and forget it. We have to understand where we are in the debt cycle in order so that we can have an exit strategy of our own. So how do the soldiers of finance, the citizens of Tyrone stand? How do we fight back? Well, we don't retreat, that's for sure. We pivot based on Dalio's all-weather philosophy, but updated for 2026 in this AI-driven market environment that we're dealing with. So here's some thoughts that you might want to consider in reorganizing your strategy as we move forward. Exit the death trap. What is the death trap? Bonds, traditional 60-40 portfolios. Right now, you could say they constitute a form of economic self-deletion. Bonds are just promises to pay in a currency, the dollar, that is rapidly losing value. Dalio himself has said that cash is trash, but bonds are even trashier. Next up, the 20% hard asset perimeter. You should strongly consider having at least 20% of your wealth in things that cannot be printed or deleted. Okay? These algorithms, you want to own things that the algorithm doesn't have purview over. So again, we're talking about physical commodities, gold, silver, real estate, and decentralized assets as well. Now, here's one that we really, myself included, have to do a better job of at least taking a look at. Geographic diversification. If your entire life, your job, your bank, your house, your 401k is tied to a single currency, you have a single point of failure, right? Soldiers of finance, we should have a philosophy where we never rely on a single line of communication or a single asset or a single currency. Yeah, we need some international exposure. Now, you got to be very careful about that, and we'll do briefings on that. Now, look, some are characterizing this as a disaster in the making, but we can actually look at it as an opportunity if we have a strategy. It's only disaster for those who are sleepwalking through this whole thing. Ray Dalio is moving his money. The AI overloads are moving their money. The question is, what are we doing? Ever since this channel's inception, we've tried to look at what the wealthy are doing and emulate it to the extent that we can at our economic level. Now, the shutdown was your warning, okay? The shutdown threatened everything from the defense of the nation to welfare benefits, right? Globally, the $100 trillion wall, that's our battlefield. But don't let your 401k become a casualty. Don't let your retirement, your economic future, the economic future of your family become a casualty of a system that doesn't care about you, doesn't care about your service, your sacrifices. All right. This thing's rolling on like a steamroller, a big metal snowball that's crushing everything in its sight unless you have a strategy to get out of the way. All right. As we move into 2026, you got to understand you're either a soldier with a strategy, you're either a member of Tyronistan with a strategy, or you're a victim of global events and the algorithm.